Joining us now, Wall Street veteran Peter Kraus, CEO and chairman of Aperture Investors. And Peter, we're not looking for you for the dire forecast. In reading your notes, although you think there will be some time remaining for us to work this out, but you point to China as having, and they maybe can do more draconian things than we're able to, but you think they're on the other side of the crisis at this point.
Well, I think that China has shown a tremendous amount of discipline in quarantining their personnel or the people in their cities. And, one of the things that's interesting about this virus is we don't know a lot about its mortality rate. We don't really know a lot about how fast it infects people, although it appears to be quite contagious and reasonably deadly, more than a general flu. But one thing that seems to be interesting is that China seems to have some success quarantining. And that may be a model for the rest of the world as the virus continues to spread.
Well, you're pointing
out the economic impact of that, however,
that's what I mean.
Is that the economies will slow, and the markets reacted to that.
Right, but you're pointing out that, and that's what we've been saying. The how bad it gets in terms of human cost is one thing, but how bad it gets in terms of just dampening economic activity, having everyone stay home, whatever. That's a totally different thing. But you say in China, it was 3 months, and you think factories are beginning to come back to work, not at full staff, but I mean, is that an inflection point? Is that a second derivative? We do know that it's not going to go the other way and close again.
It could. We know these viruses have waves, and right. This could have a second wave that could be significantly more challenging than the first. But we do know that factories are coming back on stream. We know they're not fully staffed. We know the economic activity, by looking at general gauges, is not anywhere near what it was, but we do know that production has started.
But you see the volatility in our markets continuing, but you actually put an outer range on what you feel, and that's dangerous, and I don't know if you want to, but you're saying maybe another 2 weeks, maybe another 3 weeks.
I think it'll take 2 to 3 weeks for us to understand better what the mortality rate is and the speed of infection. It'll also take that long for us to understand whether quarantines are working or not. That'll give us a much better gauge on how long this economic growth will be affected.
We're probably trying to make test kits as quickly as possible. We're going to try and deploy those as quickly as possible. There's also someday, maybe before a vaccine, but some hope for maybe something that works to ameliorate the
Yeah, but the vaccine's not available until 2021.
But a therapeutic could be available much sooner.
Yeah, I think we're going to find that medical capability is going to expand as we get to know this virus better. Things will get better. The thing we don't know is what the second wave will bring and what the impact of that is. And as I say again, we don't know the effect of quarantines. If quarantines work, then we're going to see more of that around the world, and that will affect economic growth.
Isn't it safe to say that they haven't worked already, though?
No, I think it's not. I think actually quarantines have worked. It slowed the virus. It's the difference between working like wiping it out. That's not going to happen. But slowing it so that the rest of the world has a chance to actually catch up is really the value of the quarantine. And I think that's what China proved. And you're seeing it in northern Italy as well.
I mean, it's a rounding error. The number of cases now compared to the population of the world I mean, you need scientific notation to go out far enough to get to where we are when you're talking about 90,000 people.
If we actually had counted them all, we don't.
You're right. But that in and of itself is positive. If there's some you're missing totally because they're asymptomatic.
Yes. Or Bill Gates' piece in the New England Journal of Medicine on Friday that this could be the once-in-a-century pathogen he's been worried about, simply because of the way it transmits, because it doesn't kill the host immediately. It makes it much more likely to go viral.
Yeah, to Becky's point, Wellcome Trust put out a research piece last week that was actually pretty dramatic. They said the mortality rate was between 0.5 and 1%, and they said 30% of the world population is going to get sick. That's 2 billion people. 2 billion times 0.5 is 10 million dead. That's a big number. Right. But that's going to happen over time if it happens. And I think the economic impact is really the effect of what the quarantining does and the slowdown to the growth. And look, the bond market, as you point out, is actually pretty dramatically impacted. The 10 years around 1%. It's fallen 55 basis points.
Crude's at, 44 today?
Again, demand. So, it's not as if in the economic world or in the financial world there aren't reasonably clear signposts that there are serious stress out there.
With so much that we don't know and won't know for a little while anyway, it seems like, we're not necessarily waiting for that magic advance. It's more the market has to reprice to a point where the most probable outcome is okay? In other words, it's an upside surprise.
I think that's a fair point. Two things are likely to happen. Either the market continues to be volatile, goes up and down, looking for some kind of balance as the world clarifies, or it dramatically declines to a point where it's so cheap that it won't go down any further. I doubt the latter. I think it's much more in the former, where we're going to continue to see market volatility. It probably heads further south as there's lack of uncertainty, but that will clear up over time.
Peter, what would be a dramatic decline?
Well, dramatic declines that we've seen in the past, whether it's 87, 2000, 2008, peak to trough is 50%. That's a big move. You're down to 1,700. And that could happen.
Wow, that'd be back to where you got out of the market.
No, 2,600.
No, you were 2,200 on it.
26.
You were here at 2,200. You were saying we're going to go back to 2,200.
Well, 2,200, that would be an attractive.
All right, let me ask this. So there's nothing to fear but fear. So that's what we're hoping the eventual outcome. That could be with the actual human cost, but not the economic cost. The economic cost could still be very, very fearful, even if we do dodge a pandemic bullet, so to speak.
What I'm trying to say is that the quarantining, which seems to be having an effect, will likely reduce the impact on humans, but it may actually exacerbate the impact on the economy.
Markets.